You know, in the world of finance, stories of epic collapses, they're nothing new. But every once in a while, a story comes along that is just so audacious, so chaotic, and so completely catastrophic that it just redefines what failure even means. This is that story. This is the story of FTX. And get this, that's coming from the man who oversaw the bankruptcy of Enron. Yeah, that single quote from FTX's new CEO, John Ray III, tells you pretty much everything you need to know about the scale of the mess we're about to get into. This wasn't just a company that failed. It was a financial empire that, it seems, was built on absolutely nothing. And right at the center of this whole storm was one guy, Sam Bankman-Fried, or as everyone calls him, SBF. Before the collapse, he wasn't just another CEO. He was the charismatic, kind of mop-haired face of crypto trying to go mainstream. Honestly, his public persona was genius. He was this brilliant MIT grad who was always talking about effective altruism, this big idea of earning a ton of money just so you can give it all away. This wasn't about getting rich, you see. It was about saving the world. And it was a narrative that investors, celebrities, and politicians, well, they just couldn't get enough of it. And the speed of his rise was just breathtaking. I mean, think about this for a second. In 2017, he starts a trading firm, Alameda Research. Just 2 years later, he launches the FTX exchange, and by early 2022, it's valued at $32 billion. He built an entire empire in just 5 years. And this image of success and legitimacy was absolutely everywhere. They had those Super Bowl ads with Larry David, endorsements from Tom Brady. Their name was literally on the Miami Heat's arena. SBF himself was one of the biggest political donors in Washington. And you had these top-tier venture capital firms like Sequoia just pouring money in. On the surface, FTX looked as solid as any company on Wall Street. But yeah, you can probably guess where this is going. That shiny exterior was hiding a fundamentally rotten core. While the world was seeing this visionary genius, behind the scenes, a financial catastrophe was brewing. The entire fraud, really, it just boils down to this one idea: commingling of funds. It's a simple but really profound violation. You just don't take your customers' money and treat it like it's your own. And here's the crucial part. FTX's own rules, their terms of service, explicitly told users this would never happen. They lied, plain and simple. And make no mistake, this wasn't some kind of accident. This was intentional. In her explosive testimony at the trial, Caroline Ellison, who was the CEO of Alameda Research and one of SBF's closest associates, she was incredibly blunt. She said Sam Bankman-Fried directed her to commit crimes, using billions of dollars from FTX customers for Alameda's own risky bets and to pay back its lenders. So how in the world did they pull this off? Well, they had a secret weapon. The co-founder of FTX, Gary Wang, testified that he built a secret backdoor right into the exchange's code, and he did it at SBF's direction. This backdoor gave Alameda a $65 billion line of credit using customer funds, a privilege nobody else had. They could borrow basically without limits, and with no risk of being shut down if their bets went south. The chaos inside the company was almost cartoonish. I mean, you can't make this stuff up. We're talking about a $32 billion company where major expenses were approved with emojis on Slack, where they kept their financial records on QuickBooks, the software for small businesses. They didn't even have a complete list of who actually worked there. There was basically no board oversight, no internal audit, nothing. It was, just like the new CEO said, a complete and total failure. So, with a foundation that fragile, it was only a matter of time before the whole thing came crashing down. And when it finally did, it happened with just stunning speed. Okay, so picture this. It's November 7th, 2022. Rumors are swirling, a panic is starting to set in, and Sam Bankman-Fried sends out this tweet. A simple, confident message meant to reassure millions of users and, really, the entire market. But it was a lie. A massive one. Because as he was typing those words, what was the reality? His own executives knew the company had a catastrophic $8 billion hole in its balance sheet. Customer money wasn't fine, it was gone. The dominoes just fell one after another in just over a week. It all started with a news report that questioned Alameda's stability. Then, their rival, the exchange Binance, spooked the market by announcing it was selling off all of its holdings of FTX's own crypto token. Well, that triggered a classic bank run, with customers yanking out $6 billion in 3 days. A last-ditch rescue deal with Binance fell through, and by November 11th, it was all over. Bankruptcy. So, with the empire in absolute ruins, the focus shifted from the trading floor to the courtroom. And that's where one of the biggest financial fraud trials in American history was about to kick off. The trial really came down to two starkly different stories. On one hand, the prosecution painted SBF as this criminal mastermind who knowingly built a pyramid of deceit. But the defense? They tried to portray him as a well-meaning but totally overwhelmed math nerd whose company just grew too fast. They argued he made mistakes, sure, but he never actually intended to steal. So, which story did the jury believe? Well, turns out they didn't need much time to think about it. After a full month of testimony, the jury came back with a verdict in just 5 hours. Guilty on all 7 counts of fraud and conspiracy. It was a total, unambiguous win for the prosecution. And in March of 2024, the final judgment came down. Sam Bankman-Fried was sentenced to 25 years in federal prison for his role in the whole collapse. But the story doesn't quite end there. In a case that was just full of shocking turns, maybe the most surprising one came long after the bankruptcy, and it was about all that money everyone thought had just vanished into thin air. This has been the one question on the minds of over 1 million people who lost their savings. Are we ever going to see a single dime of our money again? Incredibly, and this is pretty wild, the answer announced by the bankruptcy estate was yes. The plan they proposed said that 98% of creditors are expected to receive 118% of what they're owed. On paper, it looks like they're not just getting their money back, they're getting it back with interest. But, and this is a huge but, this incredible number hides a really painful reality. See, the payouts are legally locked to the US dollar value of the crypto assets on the day of the bankruptcy. So let's say you had 1 Bitcoin on FTX. You get back about $17,000, not the roughly $62,000 it's worth today. You get the cash, but you completely miss out on the entire crypto bull market. And for a lot of people, that's not being made whole. That's a massive opportunity lost. And all of this leaves us with the central question of this whole saga. Was the collapse of FTX a failure of cryptocurrency itself, a sign that the whole technology is just inherently flawed, or was it just a timeless story of greed and lies, good old-fashioned fraud, just dressed up in a shiny new digital package? What do you think?